Dear students, in the last session we discussed about first head of income, that is salary income, meaning of salary, definition of salary. In this session we are going to discuss about allowance. What is allowance? An allowance is a fixed amount of money received by a salaried employee from his employer to meet a particular type of expenditure over and above salary. Allowances can be any monetary benefit offered by the employer to its employees for meeting expenditures over and above the basic salary. The employers offer various kinds of additional benefits in monetary terms to their employees. Allowances are treated as a part of the salary and are taxable, except for those for which specific exemptions have been provided under various sections of the Income Tax Act. Allowances can be categorized into three: taxable allowances, non-taxable allowances, and partially taxable allowances. So, what are taxable allowances? Taxable allowances are allowances that are treated as a part of salary and are not either fully or partially exempted under any sections of the Income Tax Act. That is, taxable allowances are allowances which are fully taxable. Now you can see various taxable allowances. So first one is dearness allowance. Dearness allowance is paid by the government to its employees as well as a pensioner to offset the impact of inflation. Next one, entertainment allowance. Entertainment allowance is the amount of money given to an employee to make payment towards hospitality of their customers for business outings, client meetings, hotels, and more. The allowance is completely taxable for private sector employees. But for government employees, certain exemptions can be claimed. Exemption is limited to a list of the following. First one is 20% of gross salary. Second one, actual entertainment allowance. And third one is rupees 5,000. Next one, overtime allowance. This allowance is received by employees who tend to work more than the operational hours decided by the company. Next one, city compensatory allowance. It is offered by company to its employees, compensate for a relatively high cost of living in metropolitan cities. Interim allowance is an allowance provided by the employer instead of final allowance, and it is entirely taxable. Next, if an employer provides allowance to employees to liquidate a project's expenses, then it is called project allowances. Tiffin allowance or meal allowance are paid for refreshments, meals, tiffin services to their employees. Non-practicing allowance. As per the rules, whoever is receiving the non-practicing allowance shall not be involved in any private practice during their service, leave, or after retirement. When an employer pays an allowance to an employee working as a warden, the allowance received is fully taxable. Next one, servant allowance. Allowance provided for employees for hiring the services of servant, and such allowances are always taxable. So these are various taxable allowances. Next one is partially taxable allowances. Partially taxable allowances are those allowances which can be exempted from tax to a certain limit. as per specified in the income tax rules and regulations. Some of the partly taxable allowances are house rent allowance, hill allowance, education allowance, hostel allowance, tribal area allowance, special allowance. Next one, fully exempted allowances or non-taxable allowances. These allowances are part of an individual salary which are fully exempted from taxes. Such allowances are allowances paid to government employees working abroad. When Indian government servants are paid while serving their employment tenure in other countries, this allowance is considered as non-taxable. Allowances that are paid to UNO employees are completely non-taxable. Allowances that are paid to the judges of High Court and Supreme Court are completely exempted from tax, and these allowances are known as sumptuary allowances. When judges of High Court and Supreme Court receive any compensatory allowances, these are exempted allowances. Hope you understood the concept of allowance and what are the different types of allowances. Thank you.